On January 19th, the S&P 500 finally made a decisive move above resistance at 4850 to all-time highs, and so far hasn't looked back. What's been odd about the move is that it came with the headwind of mildly higher interest rates and declining hopes for a near-term Fed ease. Now, the argument for higher stock prices seemed to be a delicate balance between an improving economic picture coinciding with a lessening concern over inflation. Then came the CPI data on February 13th, which was higher than expected at 3.1% year over year versus expectations of 2.9%. Equity markets took the resurgence of inflation hard, with the S&P falling a quick 1.25% in the minutes that followed the data. The Fed funds futures market went from pricing in a 16% probability of a 25 basis point ease at the March meeting to less than 6%, according to the CME FedWatch tool. Now equity markets will look for clues from retail sales data on February 15th and PPI on the 16th. Now, the last time we saw this series, PPI played an important role in the lower inflation narrative, despite also seeing a higher than expected CPI back on January 11th. Now, if a trader believes that S&P futures could rally from here, they could express that by buying the March micro E-mini S&P 500 futures contract at $49.90 and targeting a move to trendline extension of 5,100. Now, a stop for this trade could be placed below at $49.20. Now, this trade could make $550 if the target is reached and risks $350 if you're stopped out of your level. Now, if a trader believes the stocks could fall from here, they could express that by selling the March micro E-mini S&P 500 futures contract at $49.90 and target a move back to the former resistance level of $48.50. A stop for this trade could be placed above at $50.80. Now, this trade could make $700 if the target is reached and risks $450 if you're stopped out of your level.